Now on to Market Movers. The jobs report for November is coming out on Friday. Let's head over to CME Group for a look at futures and options trades ahead of that report.
Welcome to Market Movers. I'm Jim Uriel with Scott and Martin.
Hi, Jim.
So we are days away from the all-important jobs number, okay? The expectations are 190,000. Fairly enthusiastic. Warranted?
I believe so, Jim, and that's because economic data from a large sense has been coming in a little bit better than expected, let's say, in the fourth quarter so far, and the jobs numbers have been right there, so 190K makes sense to me.
Okay, so what about, so let's say we get 190K, meaning, you know, the economy seems relatively, maybe not hot, but definitely not falling apart. Is the China trade talks enough to still keep the Fed dovish, juxtaposed against an okay economy?
Well, here's what's funny about that. 6 months ago, maybe not, but in the last couple meetings, Chairman Powell has mentioned some attention to the trade talks. So I believe the market is at least resting in the laurels that if the China trade talks do fall apart, the Fed's going to be there to save it.
I agree, and I think that's the sweet spot as well. Before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. When we priced this out, the S&P was trading about 31 between 15 and 20. Scott?
Yeah, volatile week so far, Jim, give or take a few points in the ES. And that's one thing, too, I think that's out there. When you look at how the charts are and look at where some of the action is, there's some interesting things out there that I'm going to give to you an example right now, Jim, that I believe you could take advantage of if you maybe want to express yourself, oh my gosh, bearishly into some of this trade tension. So specifically, Jim, looking today at buying a week 4, 3110, 3090 put spread for 6 ticks. Sounds great, doesn't it, Jim? This trade risks 300 to make a potential 700. Jim, I'm cheap. I don't want to pay for this as usual, especially with all the volatility out there. So I'm going to pay for this myself, I guess, by selling a 3200 call on the ES for 6 ticks, Jim. So my outlay for this trade is basically zero and makes my reward then $1,000 with a risk, though, of getting short at 3200 if the S&P blows through there. And obviously thinking the put spread fills that on the downside at least gives me some protection as far as any kind of pullback we have. Expires December 27th and 3120 is roughly the underlying.
I like the trade, and we do trades like this as long as everybody fully understands that that risk is being short at 3,200. That's 80 ticks away, and it's a couple weeks. It seems reasonable.
And it's through the recent highs, too, so there would have to be a big move up to, I think, get up there in my opinion.
And volatility would probably go down on an up move as well.
That's right.
I'm looking at it, guess what? Bullish. Yeah, just because I think the sweet spot, as we talked about, is a dovish Fed juxtaposed against a China situation that's unresolved. So buying the micro S&P at 3120, which is about where the market is now, with a 3170 target on the upside and a stop place below 3090, because I do think that 3100 level is a bit
bottom level of my put spread too. Good choice, my friend.
So we're all looking at the same levels. We're just doing them a little differently.
Yeah, I like it. And you too on your expression there, 3170 on the top. Guess what? That doesn't blow away my 3200 on the call I'm selling. So it could definitely move around in that area. I do believe, though, as a trader, you're going to see a lot of volatility here in the next few days as we work these deals out.
Last quick question. Are you looking at the trade you talked about as more of a hedge against the long position or more of just an opportunity?
It's both, frankly, but I think it's definitely an opportunity with respect to where the markets are, how far they've come, and the fact you said earlier, volatility has been sucked out of this market.
Okay, thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.